Hello, Warriors. Dale Pinkert here at TradeGATEHub.com, powered by TradeView Markets. The elephant in the room, of course, this week is the Fed. We also have NFP on Friday, and we have the RBA tonight. So I want to talk about the metals first because we're approaching targets that were talked about. Gosh, it was only a week and a half ago when gold peaked up here. The video was here when I was talking about the potential for 1840, and we're almost there. The 200-day coming in around 1834. So I have zones between here and 1825 as a very important zone in gold. I think it could end up being a sell the rumor, buy the fact, maybe across the board on the Fed, that they go with the 50%, 50 basis point hike, and that maybe the language is tempered during the presser. Dare I say, are they going to use the word pause? Are they going to bring up QT? Just my trader intuition says it could be a sell the rumor, buy the fact across the board, including equities. So just want to take you through this. The metals were one of the best forecasts. A lot of people were saved a lot of pain, even if they didn't short it, and they got out of the way in the miners and the gold. And silver actually has been leading the way. And for weeks I've been talking about, I thought that the gold silver ratio was going to make a run to the upside. It was, of course, never happens exactly on time. We moved sideways a bit longer, but this was a pretty significant week. And I've heard targets as high as 89, 87.60 is going to be 38% back from this big move from 128 that we had back here all the way down to 62. So it's really just a corrective move, but really showing its hand and how important it is to get direction of the gold silver ratio correct, so that you know what your preferred long and shorts are in the precious metal complex. Also, viewers know I've been very negative copper. In fact, I was negative copper before I got negative gold, and we've had a pretty good break. We were never able to make a new high. I thought there was a chance for it, but big breakdown. You look at a long-term chart of what we have going on here in Freeport. That too was about 20% move in copper. I don't think the move in copper is over, so I'm still looking for lower numbers there as well. Silver, as you guys know, I'll be looking at taking a stab at the silver once we clean out the stops under the lows that we posted early in the year around 2134, and we could be there by the Fed. So, we're not that far away from taking out every last bull. Take a look at the weekly and you'll see that there's got to be a lot of liquidation that's going to take place under this low of 2135. I know we're still 90 cents away, but in silver that could happen by the Fed. So I have some moving averages coming in here, a little bit over 20, 30. I have some numbers, 61.8% retraced at 1860. But I'm looking at this. I'll be taking a stab at the long side of both gold and silver and the shares. And in fact, the shares, when you look at them, I don't think shares like Yamana are going to make new lows after this big move that we had, right? From about 370 to almost 640. I'm looking for more retracement moves in the gold shares. So look at this chart and how much stronger the gold shares are compared to when you look at, say, here's the silver juniors, right? Much weaker. Held a 200-week moving average so far. I think they're going to flush it under here. So I'll also be looking at the miners. I believe gold will make a higher low, and most of the silver shares, especially the juniors, are going to make lower lows. Here's a junior, not that far away from this low. Put up the daily, and you'll see we're almost there on Endeavor. And here is First Majestic. We're almost there as well. Then I think that the silver shares may begin to outperform. Once you've taken all the bulls out, you'll start hearing, oh, why buy silver? It's an industrial metal. It's going to be weak with the stock market. Prefer gold. It's more of a both deflation hedge and, well, not the best inflation hedge lately, but you'll start to hear that bearish talk down there. So let's get to the currencies. We do have an RBA meeting today, and I look at the Aussie down 11 here, and here's your daily. And this was the low of the move. This ended up being one of the biggest bull traps I've seen in my career. And the Aussie looks to me like it wants new lows here. And I have some return lines under the 70-cent level, around 67.5. I think this is when the dollar most likely will peak. It'll be the last one to bottom. Will be Aussie. Maybe it gets there, and there's more downside in Aussie from here than there is in euro. The reason I've given up at least short term on the top picking in the dollar is my contingency was here back in around the ECB meeting that we still had weekly divergence. That's been blown out. Okay. And then we also had daily divergence. That too was negated. Waiting for the RSI to pop up here for a minute. Here it comes. Confirm low. So on my work, that's something, that I'm not going to bottom pick until divergences start showing up again. There will be some short-term divergences here, and I wouldn't be surprised if the Fed is also in the dollar or buy the rumor, sell the fact for at least a reaction. And same could happen here in US dollar yen. I'm looking at this 4-hour chart. And if we get another push up, here's your first high confirmed. Here's your second high over 70. So not ideal, but still pretty glaring divergence. And on the Fed hike, if we get a rally back above 131, RSI is trading under 70. I may attempt a short post-Fed on that as well. Want to talk a little bit about the S&Ps and the NASDAQ. So this is a real big week in the S&Ps. And I've shown this weekly chart, this wedge line that it tagged, and we had a bounce here, and we're making new lows. So what's interesting to me is looking at groups that I talked about that may hold up better. So it's going to be interesting for me to see what happens here in the semiconductors. They did not make a new low on Friday. Not saying they can't, but I think the S&P, what it needs to do is clean out the low that we made here at 4106. I mean, we're 6 handles away. And the significance of this 41 level on a closing basis is, some people have it as a neckline. And last week I showed it as a megaphone. So if we start closing back under this megaphone top, this wedge line here, it opens the door for 3,400. Let's just say trader intuition that I think there's a chance of a face ripping bear market rally. The bulls are saying this is a wave 4 and we're going to get a new high. And I know the bears are looking for lower numbers, but sentiment wise, we could have a vicious short covering rally. Maybe the Fed will use the GDP as cover, where we had a negative GDP reading last week at negative 1.7. And actually, the biggest part of that reading was our trade balance, where we were massively importing things, and with a strong dollar, which is becoming a problem for in multinationals, are taking charges from the strong dollar, that perhaps to get GDP up, it would help to have a break in the dollar. That remains to be seen. But here we have, I'm going to be very interested to see how my preferred group for bottom picking and looking for a low is the semis. And then last week I told you guys I was looking at some of the cannabis. stocks, and I got the best of breed from Mike Venezia, and Canopy had a very good day on Friday. Let's look at it here. See this? Okay. So pretty nice divergence on Canopy. And this is with the market. It had a good day with the market getting slaughtered. So I think you could buy breaks, you know, if it tries a margin on low. I don't think there's tremendous downside, and a bear market rally in Canopy would take it up to 7.5. If you want to get even more positive, looking at the daily moving average, here's your 7 area, and we get through that. Why not 11? So I like the cannabis sector. I'm going to be watching that to see if we hold the lows or diverge at new lows and the semis after the Fed. So I'm going to hold some positions, but I'm not going to add until after the Fed. I'd rather react to the reaction than play roulette and make a red or black bet on that. I'm starting to move back into Euro pound. And despite the weakness in Euro, the Euro pound has put in successive higher lows, with the Euro putting in lower lows. Here was the first higher low. This was after the ECB. So although the Euro broke towards 107, now we're at 105, about to make new lows. I'm betting on a higher low here, and that we're not going to take out 82.50. So I'm a scale and buyer between here and 83, and I would define my risk under 82.40 on Euro pound. Canadian looks like it wants to make a push maybe up towards this 131 level, while Aussie is making that new low. Here's a very important weekly moving average, comes in around 30.40. So I think that could continue and can continue to squeeze, especially if we get some type of breakdown in crude. I noticed we were lower today by 3.5. It's not an easy chart to read. After last week, thought we might get a rally to 113, but again, this is still a descending triangle, and the implications of a descending triangle are bearish. And so against last week's highs, you could be short, looking for a 94 breakdown. This can take you substantially lower. A similar pattern that we had in gold, descending triangle. So maybe we get that kind of action. You know, gold tried to hold this descending triangle as well. Silver never even came back to retest after taking out 24. So I've been talking 21 just based upon 27 to 24, subtract 3 from 24 and you get 21. Want to take a look at what's happening in yields, because this is going to be a big deal. So we're about to make a new high in the 10-year. And if you notice here on the daily, we are not confirming. This is the first time. So I actually think that Treasury notes and bonds could also be a sell the rumor buy the fact on the Fed increase, and that we could get some type of rally, extreme bearishness in all interest rate instruments, including TLT, which is making new lows on a gap lower opening here. Really, I was in fact talking to someone earlier, and I took a look at the monthly on TLT. And although I'm looking at the potential for a rally, look at this head and shoulders, you know, and was talking about it. I did think and took a stab at 130. And now down here, I think that we could be set up for, if the Fed tempers their words and their statement on Wednesday, that there could be a bear market rally in this. But if you just measure this from 133 to 179, if you're a bear, you're looking for under par, would be the measured move of this breakdown that we had here. So A lot of market cap loss across the board in the bond market, probably as much damage to people in principal and bonds as there has been in equities. So that's what I see today. The only new position I put on was long in euro pound on a scale in. I'm looking to scale into this, but I expect most of my activity to be very light until after the Fed, and then we'll have the NFP to contend with. But it is my contention. I know there are a lot of Aussie bulls, and they have a good argument. I just think that if you look at this daily chart, let's look at the weekly, that there has to be a capitulation in my view under this little triple bottom to set up a very good buying opportunity. I'm figuring between 7.5 and 6. So I'll be backing up the truck for Aussie down here. And this may be around the time the dollar does peak. In the meantime, I'm just playing in the currency market, long euro pound, and may take a short in the end, which kind of lines up if yields are going to peak on a 4-hour divergence play with the RSI staying under 70 after the Fed. You can stay tuned for Mike. Ask him for best of breed. That's what I did. And when I started looking at semis and cannabis last week, and Mike will be with you in an hour and 15 minutes. And tomorrow, one of the more popular broadcasts that we've been putting out is when Mike and I team up as co-anchors, and I bring some of my macro stuff to the table, and Mike gets specific about things that he's seeing and things that he's trading. So I always look forward to getting together with Mike on Tuesdays, turnaround Tuesdays. So we'll see what Mike and I come up with. We don't script it, it's spontaneous, and look forward to people beginning to take advantage of our calls, not just on video, but coming into our main chat. You could sign up as a user and then begin to receive notifications of the programming. So you can go ahead and do that by just going to TradeGATEHub.com and registering. And I want to wish everyone good luck this week and tread lightly, especially in front of the Fed. But I do think there's going to be some shorts to cover and some bounces to take place post-Fed. And I think that the semis are going to be one of the groups, and cannabis, that react pretty good, especially since NASDAQ, the semiconductors are very interest sensitive. So this is a call that, maybe rates are peaking here. And now we're getting some technical indicators that making new highs or about to make new highs without confirmation on some longer term charts. The daily, it's pretty glaring. So I really believe that Wednesday after the Fed's going to be a key time for trading. As always, probe and protect. The only thing you could control is risk, reduce the leverage during these times, and give your trades room to breathe with wider stops and less leverage instead of too much leverage and not being able to survive a small drawdown. So, I leave you with this. If you can't be wrong for a day, how can you be right for a week or two? So good hunting. Don't just count your pips, count your blessings. You'll be seeing Mike in an hour and 13 minutes, and Mike and I together tomorrow. I have a great guest lined up for Thursday. He's an author. He believes that deflation is what's positive for America, not inflation. So it's going to be an interesting interview. I'm not going to give you the name, but he has a great book out that you may want to check. So you have a great day trading, everyone. Don't forget to ring the register when you have money made. I think the gold, silver, and copper short forecasts, along with using Freeport as a proxy, could have added value to what you were trying to accomplish, or at least get you out of the way from being hurt, being long. So that's part of what Mike and I do. We've all gone through the pain, and we consider it a mission to help you avoid as much as possible through our own experiences. So you don't have to, go through that type of suffering as a trader. I know that, everyone has to go through their own process on their journey, but if we could give you some advice on how not to make that one mistake in a one mistake business, I think, it may not show up in your P&L, but it'll show up in your longevity as a trader. Have a great day, everybody. See you tomorrow. I'll be in the room to hear Mike in an hour and 11 minutes. Adios.